Gold, $5,000 per ounce. Silver, $100 per ounce, likely sooner than most anticipated. Significant movements and volatile shifts occurred in the gold and especially the silver market overnight. This analysis will dissect those movements, examine major developments from China, review critical updates from the COMEX, discuss announcements from the largest bullion dealers, and analyze mainstream media coverage, including Citibank's latest projections, all providing concrete evidence supporting an optimistic outlook for gold and silver prices. However, the most significant element of this discussion is the audience. This platform represents the largest precious metals analysis community, but its success depends entirely on consistent viewer engagement. Audience participation makes this possible. Viewers are essential. Subscribe to the channel, provide positive feedback, enable notifications, and contribute comments. Community dialogue creates learning opportunities. Perspectives may align or diverge, but both scenarios facilitate knowledge advancement. Additionally, voluntary financial contributions are appreciated but never required. All content remains freely accessible. Now examining overnight developments. Around 8:09 p.m. Eastern yesterday, gold prices declined, but silver experienced particularly severe selling pressure. The situation appeared challenging. However, examining Chinese market activity overnight reveals fascinating developments from two sources regarding silver in China. The first report came from Eric Yong, known as King Kong 988. He reported that the Shanghai Gold Exchange benchmark precious metal spot silver price reached $99.98 per troy ounce equivalent. This represents the physical market price on the Shanghai Gold Exchange. Critically, this figure excludes the VAT, value-added tax. The VAT gets added to this price upon physical silver loadout from exchange vaults. This development carries enormous significance, regardless of COMEX activity from the previous night. The actual physical silver price in China stood just 2 cents below $100, but additional information provides even greater context. King Kong 9888, a reliable and insightful source for the silver and gold community for years, provided further calculations. Today, the Shanghai Gold Exchange physical silver price, including the value-added tax upon loadout of physical silver from SGE vaults, actually reached $130 per ounce. He provided detailed computations confirming accuracy. He noted that the SGE quotes silver prices without the value-added tax included, that $99.98 figure examined earlier. However, when adding the VAT tax, the actual physical silver price in China currently stands at $113. Why does this matter? First, because this represents their physical market in China. More importantly, China and the East, including India with their 1.4 billion people and rapidly expanding economies, are increasingly controlling price discovery for silver. The COMEX operates with a make-believe silver price, paper fantasy. Fantasy Island silver. Make-believe paper, electronic, whatever terminology applies, leveraged 300 and 400 to 1. What matters now in this new environment for silver is the physical price, what consumers pay at local coin shops. Recent examination of online bullion dealers revealed prices for American silver eagles that approximately 2.5 years ago sold for roughly $28 each. Current prices exceed $100. For bulk purchases of significant quantities with cash payment, prices reach approximately $100. For smaller quantities of 1 to 500 pieces, prices were running $104, $105. These prices determine actual market value. An important clarification: retail silver demand doesn't actually set silver prices. The major market participants determine pricing. Currently, the major players are China, India, and the East, who are assuming control of price discovery for silver. For comparison purposes, examining the COMEX and LBMA situation provides context. An amusing development will be saved for later discussion, one of the finest examples of silver market humor available. A quick COMEX update follows, but first, examining analysis from Rashad presents a novel perspective. Silver was rejected at the upper band of a rising 2-month channel. Once the current restart completes, expectations point towards silver breaking out from this channel upwards of $100 plus. Examining the chart reveals important patterns. A 2-month channel starting November 13th, 2025 through the previous night shows silver price movement within this defined channel. Price action bounced around within these boundaries. Yesterday's upward movement met resistance and reversed downward. Significant downward movement remains possible while still maintaining what represents a very powerful channel for gold and silver prices. Speaking of COMEX, examining current real-time data reveals surprising developments. Is this accurate? Is silver actually advancing currently? Checking the March contract data, requiring refresh to confirm technical accuracy, silver shows minimal decline of 1.5 cents. Remarkable. Silver has never demonstrated such resilience. Now showing positive movement of 4 cents. Examining a 5-day silver chart provides perspective. The previous night's activity appears clearly. Silver price declined $5 per ounce, yet currently shows positive movement of half a cent. Unbelievable resilience. Examining spot prices alongside futures provides additional context. The futures market reflects silver theoretically deliverable in March. Spot pricing might show slight delay, but both spot and futures markets demonstrate incredible silver resilience. Perhaps the paper game is concluding. Yesterday, the silver market traded 1.2 billion paper ounces, according to daily analysis. Further examination from Hansa provides deeper analysis. One day saw 1.27 billion ounces of paper silver transactions on COMEX. This equals 1.27 billion ounces of silver, in quotation marks, highlighting the distinction. Paper make-believe Fantasy Island silver trading in one day. Let that register. That represents nearly 40,000 metric tons. More importantly, that's 1.5 times the annual global mine supply. Mostly, no physical delivery occurred. This is not price discovery. This represents paper leverage suppressing a physical market already experiencing structural deficit. Retail hype isn't necessary. When the remaining 98% of people, affectionately termed the sheeple, eventually arrive, local coin shops will have no silver available. They'll encounter empty display cases. Perhaps some Lego figures will occupy the space. ETFs aren't necessary. Sentiment isn't necessary. The mathematics alone screams that the physical market is tight. Paper silver represents illusion. Own what cannot be printed. Own what cannot be settled with cash. Physical exceeds paper. Understanding what's currently being experienced in silver and gold markets requires perspective. Current market developments represent nothing short of historic. This analysis captures a historic moment. The world has changed. The paradigm has shifted. Could this analysis be incorrect? Absolutely. Is this analysis incorrect? Absolutely not, in this analyst's opinion. Viewers must make their own decisions. This represents no financial advice. Regardless of market direction, volatility will continue. Previous night's activity saw silver decline $6 at 10 p.m., creating temporary concern. However, reality confirms precious metals have entered an entirely new paradigm. Yesterday's discussion covered geopolitical factors. The world has never experienced the current situation during recent lifetimes. More strife and conflict exists between nations than ever before. Additionally, unprecedented financial chaos exists, worldwide debt representing promises. Everyone expects repayment with paper make-believe money. Gold and silver occupy an entirely new world currently. Next, examining announcements from one of the world's largest bullion dealers reveals shocking developments. Before proceeding, discussing reliable sources for physical silver acquisition makes sense. Silver specialists exist, specifically those owned by First Majestic Silver, one of the world's major silver mining companies. First Mint operates in Las Vegas, Nevada. They exclusively handle silver, obtaining supplies from First Majestic. First Mint transforms this silver into world-class bullion products for direct consumer delivery. Remember that 1.27 billion ounces of paper. When purchasing silver from First Mint, metal travels directly from mine to mint to consumer, never touched by COMEX, never touched by LBMA. Learning more about First Mint and reviewing their product offerings is available at their website, First Mint. Comedy Critics. Free shipping applies to orders exceeding $299. Current high demand creates slight shipping delays, but their store offers bars, rounds, and the Folds of Honor product line. Incredible News provides insights into current silver investment activity. This information came from COMEX. COMEX has operated for years as a major, enormous bullion dealer. The recent announcement reveals critical information about current silver market conditions. Silver analysis from various sources confirms COMEX instituted a $10,000 minimum order requirement. COMEX just delivered shocking news to the silver market in total chaos mode. Their CEO sent out a bombshell letter confirming the squeeze is real and hitting hard. On January 14th, 2026, yesterday, key highlights were summarized by silver analysis sources. Key points include $10,000 minimum on all retail purchases immediately to throttle insane order volume. Orders delayed at least 4 business days. They're adding 4 extra days to ship dates. Minting focus now laser focused on just 31 products. Up to 21 products already in stock with goals for most by weekend if demand doesn't spike again. Pre-sales mostly shut off unless they can ship within 2 weeks. The letter came from Ken Lewis, Chief Executive Officer at COMEX. What does this reveal? Perhaps silver shortages exist not just at COMEX but worldwide. Reports from China show ground-level craziness in their silver market. Now, one of the world's largest bullion dealers confirms silver market chaos. Information arrives from all angles, including mainstream media coverage, which will be discussed next and why that matters. Additionally, information comes from megabanks. First, Mining Gold deserves acknowledgement for sponsoring this analysis. This represents a stock owned long before sponsorship began. This provides no stock advice, stock brokerage, or financial advisory services. First Mining Gold merits attention because they possess two huge development stage gold projects in Canada, an excellent jurisdiction. They have two of the largest development stage projects. Major mining companies currently minting profits need to refill their pipelines with significant projects. Jurisdiction becomes increasingly important. Those same major mining companies need to find more resources to mine future ounces. They're all focused on growth. The tide appears to be starting for the overall mining sector. Developments in the sector and with First Mining Gold will be very interesting. Learn more at firstmininggold.com. Examining CNBC coverage reveals why mainstream media reporting matters. CNBC, the mainstream of mainstream media, reports that resource nationalism could propel gold to $5,000 and silver to $100 this year. According to Evelyn Partners' Daniel Casale, one factor driving upward price movement is resource nationalism. This reflects the geopolitical situation discussed previously. A global scramble for resources is occurring, including gold and especially silver. Both the US and China are attempting to gain leverage through control of critical resources. Silver is widely used in manufacturing. China placed export controls on the metal in December. Everywhere, numerous factors affecting silver exist on both macro and micro levels. This information appears on CNBC, mainstream media. The critical element, mainstream media and mainstream generalist investors who haven't yet entered the gold and silver sector represent a barely tapped market. Perhaps second or third inning. When they read articles like this and become aware, even a tiny amount of new investment will have massive impact. The law of small numbers works favorably. Current investment in silver and gold represents approximately 2 to 3% of people. Only a small increase creates massive market impact. Moving from 2.5% to 5% represents a doubling. This remains historically quite low for total investable assets in precious metals, physical metals, and mining stocks. Going from 2.5% to 5% represents significant movement. That's the law of favorable small numbers for precious metals. It's easier than going from 14% to 28%. If investment levels move from 2.5% to 7.5%, that represents approximately 200% increase. The smallest increase could resemble a flood of money, liquidity flowing into markets. As Doug Casey stated, it's like trying to drain Hoover Dam with a garden hose. Insufficient metal exists. Insufficient resource stocks, gold and silver mining stocks, exist to supply what could develop. This analysis could be wrong. It happens occasionally. But insufficient supply exists to fulfill what could become ferocious appetite for the precious metal sector. Examining Kitco coverage reveals Citibank's latest projections. Ernest Hoffman at Kitco provides excellent information alongside Neil. Gold will hit $5,000 per ounce. Silver $100 per ounce by March. Current month is January. March arrives in approximately 7 weeks. Silver $100 by March, according to Citigroup, one of the mega banks with approximately 200,000 employees. They represent a major financial institution. Strategists led by Kenny Hu raised their 0 to 3 month target, meaning immediately to 3 months, for gold to $5,000 per ounce and silver to $100 per ounce on Tuesday. The Wall Street firm projects the ongoing bull market for precious metals continuing through early 2026. The strategist cites heightened geopolitical risks, ongoing physical market shortages, and renewed uncertainty on Fed independence as reasons for the upgrade. Important warning information exists. This represents concerning news, examining potential pitfalls alongside potential advances for all metals. The strategist warned that a collapse in silver prices due to S232-driven outflows could lead to tactical sell-off across other precious metals and base metals, but stressed they would view that as a dip buying opportunity. That S232 relates to tariff developments. Apparently, risk exists that unfavorable outcomes could create challenging times for silver. This could possibly resemble previous predictions. Many top analysts from TD Securities and Stephen Van Meter predicted crashes or major downturns in silver prices due to Bloomberg Commodity Index rebalancing. The index has now completed rebalancing. That predicted crash never materialized. Even if silver experiences downward pressure, they view that as dip buying opportunity in a trend bull market because underlying bullish drivers across the metals complex remain intact. The big picture factor deserves discussion, addressing immediate developments. Examining silver mining stocks and silver prices reveals significant implications. This information from Wall Street Analysis proves remarkable. Silver miners will demonstrate huge profits in 2026. Examining average prices reveals surprising data. 2025 Q3 silver price averaged $40, July, August, September period. 2025 Q4 October, November, December averaged $60. These figures will appear in upcoming earnings reports. Q4 2025 earnings will show huge increases based on $60 per ounce. But there's more. So far, in 2026, only 2 weeks completed, silver is averaging above $80. currently averaging above $8 in first quarter 2026. Silver mining stock valuations don't even remotely reflect current cash flow from selling at $90 per ounce weekly. Silver mining stocks are priced as if silver remained at $50 per ounce. Two critical realizations emerge. First, many people express concern about mining stocks. They've performed well. Complaints aren't really justified. Mining stocks are owned, but they haven't kept pace. They likely will once markets realize the profits silver miners are generating. Once markets wake up and believe, as most here believe, that silver prices occupy a new paradigm, substantial money will flow into the silver mining sector. This will bring overall increased investment, those 2.5% levels moving to 5%, 7.5% of people invested in the overall precious metals ecosystem. This can happen, as evidenced by amusing market observations. One of the funniest developments in the silver and gold sector recently came from Make Gold Great analysis. Banks trying to stop silver, major banks attempting to suppress silver prices, banks with oversized short positions represented in video format by a masked figure in red jacket trying to stop the silver vehicle. The silver vehicle represents silver itself. Red represents losses being incurred by major shorts currently. That scenario does not end well for bankers trying to maintain short positions above water. One final big picture element, US dollar devaluation. The US debt clock shows debt amounts creating massive interest expenses, feeding into overall massive deficits. Spending exceeds revenue. Deficit increases debt, which increases interest expense, which increases deficit. It's a doom loop, a debt spiral, happening currently. The net result is US dollar devaluation, money printing. The next consideration really drives home the point. Current situation analysis reveals stocks at record highs, gold at record highs, silver at record highs, home prices at record highs, copper at record highs, platinum at record highs, money market funds at record highs, US debt at record highs, deficit spending at record highs, household debt at record highs. The list continues. When everything hits record highs simultaneously, measured in fiat paper dollars, it's not coincidence. Fiat currencies are depreciating. This will continue, providing strong tailwinds for precious metals. This represents a community of silver and gold enthusiasts. Viewer participation is important. The analysis continues.